if you listen to Trump and Bessent and everybody, they're like, first get the dollar down, get rates down, get oil down, get the tariffs done, get some tax revenues coming in from that, maybe give them out to some people, the bottom 50%, whatever it is that they do with this. And then it's about growth because they need the economy growing. And Bessent has been really clear about this. Is like, we need Main Street to be making money again. And the issue has been rates have been too damn high. And they need to get the ISM through 50 and accelerating higher, which is the classic sign of the next phase of the cycle, which is when liquidity is really happening, the business cycle's happening, earnings get recycled, people start taking risk. That all lies ahead. But because the ISM is still bottoming, which is unbelievable, it's the longest bottoming pattern, I think, in the history of the ISM now, it kind of almost certainly pushes the cycle into 2026.
Yeah.
Which means we've got 12 months ahead of us.
We're entering the early stages of a massive economic transformation, with Bitcoin playing a major role in this shift. If the current momentum continues, 2026 could mark the beginning of a new financial era. That's the latest insight from Real Vision CEO Raoul Pal. Meanwhile, U.S. President Trump, Treasury Secretary Bessent, and other pro-crypto political leaders are working to ease financial pressure by lowering interest rates and oil prices while boosting revenue through tariff. Their ultimate aim is to reignite economic growth. Bessent is focused on revitalizing Main Street, everyday businesses and households, but high interest rates are currently holding back that recovery. Pal highlights that for true growth to take off, the ISM needs to climb above 50. Until that happens, he expects the full economic recovery, and Bitcoin's next major surge, to materialize closer to 2026. Stick around until the end of the video as Raoul Pal breaks down what's happening in global markets and explains what it all means for Bitcoin. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.
There's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. You know, price action in Bitcoin is actually not that bad today, not like the Nasdaq's getting nuked. And I'll talk about the Nasdaq in a sec as well. So global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil. And, you know, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, you know, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, you know, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like, China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar. And the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing. Because we've both identified it's like next 3 months, for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels. Pretty certain. Now, the question is whether it's next month higher, which I actually think, we probably end up, you know, higher within 2 weeks' time than we are today, put it that way. And so global liquidity means that a lot of it's going to be driven by the dollar, which is now trending lower. And if it breaks kind of the 100 level, it can move down to, in DXY, it can break, you know, it can move down to 90 or so, which would be, a good cyclical dollar bear market in a structural dollar bull. Then we've got the central banks and others, and that's driven probably by China, the US, and others, I'm guessing, using other liquidity measures within that. So, China's probably the big one in that. Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects. And then it tops. And this is the monthly DMARC. And we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away, which would match to me with the 9.13.13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and usher in the next phase. What I talk about, the second phase of the banana zone, which is really often alt season starts at this point. If I think about the crypto years, year 4 of the cycle being this year, year 4 of the cycle was 2017. Look what happened. Year 4 of the cycle was 2021. Look what happened. Year 4 of the cycle, we're coming in at the low, exactly as we did every time. It's interesting.
Bitcoin's price is holding up surprisingly well, even as broader markets remain unstable. According to Raoul Pal, much of the pressure from rising interest rates, higher oil prices, and a strong dollar has already been absorbed. Now we may be seeing a turning point. The dollar is starting to weaken, a major signal, Pal says, that global financial conditions are improving. When that happens, it often leads to stronger growth, greater risk-taking, and rising asset prices, Bitcoin included. Pal believes we're entering a new phase of the market cycle, where momentum could soon return to crypto, with Bitcoin likely leading the way. He points to clear similarities with previous bull runs and suggests that the coming weeks and months could mark the start of a fresh move higher. If he's right, we could be witnessing the early signs of another major shift, with Bitcoin once again at the center of the action. Now, let's dive back in and hear more insights from Raoul Pal.
If you think this thing through, there's either the cyclical moves within the longer-term downtrend of Bitcoin being more dominant, but then there's these larger cyclical patterns of a much larger reset. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here how similar that is to the kind of 2021 period where you come into the year and then the whole thing just gets subdued for a period of time. Yeah. Also, the one I look at a lot, what's not on here, is 2017, where I think there's a lot of similarities. And this is basically what I've always talked about when I talk about network activity and Metcalfe's law. This is a much more detailed way of establishing how vibrant is the network, how real is the activity, what's the longevity like, what's the growth like, because these are the things that drive price. We know that obviously global liquidity drives price, but the other thing is the network has to be valued, and network value is what drives the long-term secular trend above and beyond that of liquidity. This is the magic of why some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the NASDAQ. And so the NASDAQ is 97.5% correlated to, or it has an R-squared of 0.97 to global liquidity. And Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption. And we've had 7 of these corrections since the bottom. And the last cycle, we had 5 in the last year of the cycle. The one I look at a lot is 2017. We had 5 of them that were all like 30% plus. And then, so we bottom over the next 4 weeks, probably more sideways than sharp down. Obviously, alts probably still continue to bleed for that period of time because Bitcoin needs to reestablish itself. Coming out the other side, we've got a lot of discounted stuff Because people, I think, mentally in their heads are like, oh, well, I want to start getting out by October because, and so they keep getting worried we're not going to make the price returns. But we've got a year to make price returns. And the last year of a bull market, we've often seen 2, 3, 4, 500% returns.
Global liquidity is rising, and financial conditions are starting to ease, a setup Raoul Pal believes could fuel a strong market rally. He compares today's environment to previous Bitcoin cycles like 2017 and 2021, where growth began slowly before taking off. Pal stresses that what truly drives Bitcoin's value over the long term isn't just money flowing in, but how much people are using and building on the network. Increased activity is what helps Bitcoin outperform traditional markets like the Nasdaq when momentum returns. If history repeats, the biggest gains, possibly even up to 500% in a single year, could still be ahead. Meanwhile, MicroStrategy co-founder Michael Saylor recently responded to a question from Barstool Sports founder Dave Portnoy about Bitcoin's short-term correlation with the stock market. Saylor explained that Bitcoin behaves like a risk asset in the short term because it's the most liquid, easily sellable asset available 24/7. During times of panic, traders sell what they can access most easily, not necessarily what they prefer to sell. This, he emphasized, doesn't mean Bitcoin is fundamentally tied to stocks in the long run. While some still view Bitcoin as a risk-on asset, others, including BlackRock's digital assets head Robert Mitchnick, argue it acts more like a risk-off asset over time. Saylor continues to view Bitcoin as the ultimate store of value, with MicroStrategy holding over 528,000 BTC, the largest reserve owned by any publicly traded company. Do you think Bitcoin is truly becoming a reliable long-term store of value, or is it still too volatile? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.